Welcome back. I'm Pratap here. Today is 12th February 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. We got very good trades today. But before we get into the trades, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars. But we are providing complete free training. All the training lessons can be accessible at our NeoStock YouTube channel. At our channel homepage, you click on the tab Posts. Some of you might be seeing the tab Community. Click on that Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. You have all the training lessons are available here. But you need to start our training from lesson 1.1. That is the first lesson. And that lesson is available at the bottom of the page. Scroll down to the bottom of the page. Here starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons one by one, according to the training instructions I mentioned at our Telegram channel. I provided the Telegram channel link in this video description. So please join at our Telegram channel. At the top of the window, you can find pinned messages. So click on the pinned messages. You can access the training instructions and learn this course according to those training instructions. Definitely you will become a very good independent trader in next 2 to 3 months time period. Okay, please make use of this opportunity. Now let's get into the analysis of the high liquidity zones we identified in our yesterday's end of the day report. So yesterday end of the day report, our software identified 8 high liquidity zones from daily and 75 minutes time frame. Out of these 8, we got 5 trades and all 5 are successful trades. And 3 trades reached the 15 minutes target and 2 trades achieved 1:3 minimum RR. So let's focus on them. First one is UltraTech Cement. This is a daily high liquidity zone. We have a rally candle, 2 base candles and a drop candle. This is how our software identified the daily zone. This daily zone is fine-tuned with 75 minutes time frame. Here you have 2 75-minute zones, drop, base, drop, and also here, oh my God, maybe it is a tester, that is one I might have left, but anyway, let me show you. Here we have rally, base, drop. This is another 75 minutes high liquidity zone, fine-tuned zone. These are the 2 75 minutes fine-tuned zone. And again, we need to fine-tune these zones with 15 minutes time frame. Here you have drop, 2 base candles and a drop candle, a 15-minute zone, drop, base, drop. And also here again you have a rally candle, 1, 2, 3, 4 base candles and a drop candle. Okay, this is a 15-minute supply zone. And both these 15-minute zones again you need to fine tune with 5 minutes time frame. So in the 5-minute zone here you have failed ERC candle as a leg-in. You have 1, 2, 3, 4, 5 base candles and drop and follow through candle. So this is a fine-tuned 5-minute zone. This is the zone we got the trade today. When you got the trade at 9 o'clock 20 minutes, 5 minutes candle you got the trade, and when it reached the target 9 o'clock 35 minutes, 5 minutes candle. In 15 minutes the trade is completed. But before that even we have one more fine-tuned 5-minute zone here. See, we have a rally, 2 base candles and a drop candle. These are the tinny candles. See, this is the area. It is already tested same day. It gave two tests. And this is a tested zone. That's why we didn't plan any trade in this area. But this one is the fresh zone. And today we got the trade here. Morning 9:20, 9:35, 5 minutes candle, it completed the trade. Just 15 minutes. In 15 minutes, do you know how much profit UltraTech Cement has given? It has given 11,550 rupees profit, which is 11.3% ROI as per one futures margin cost in just 15 minutes. If exactly you want to know how many minutes, go to 1 minute time interval, you will understand. You got the trade in morning 9:20 candle, 1 minute candle. Reached at 9 o'clock 36 minutes candle. That means in 16 minutes your trade is completed. Just 16 minutes. See, today all the trades are like that. They gave huge profits today. So today, like HLQ zone traders, they would have got a good profits. And moreover, after completing this trade, you got another trade that we will discuss later. So this is about UltraTech Cement. Next one is L&T Finance, LTF. This is also this is 75 minutes high liquidity zone. Let me go to the 75 minutes time frame. You have a drop, base, drop. This is how our software identified this zone. Drop, base, drop as a high liquidity 75 minute zone. And this one is fine tuned with 15 minutes time frame. You have a drop candle, two base candles, and again a drop candle. Drop, base, drop. This drop, base, drop 15 minute zone again fine tuned with 5 minutes time frame. Here you see you have a drop candle, a base candle, a small tinny candle, this one, and a medium size base candle, part of the base, and then a drop candle. So drop, base, drop. And this is the area we got the trade. When we got the trade at morning 9, actually it is not a 9:15 1 minute candle. This is 9:15 5 minutes candle. But you got the trade at 9 o'clock 19 minutes. Go to 1 minute time frame. Nine o'clock 17, not 19, 17. See, 9 o'clock 17 minutes candle, you got the trade. If it is a 9 o'clock 15 minutes candle, we would have ignored this trade. Because 9 o'clock 15 minutes candle, we are avoiding the trades. That is what we decided. We don't consider any trades on 9:15, whether it is successful or whether it is stopped out, we don't consider. Because of huge volatility on the morning 9:15 candle, sometimes freak trades are taking place. That is another reason. Okay, anyway, it is a very good trade. Morning 9:17 candle, you got the trade. And when it reached the target, at 9 o'clock 46 minutes. So that means within exactly in 30 minutes the trade is completed. Earlier trade in 16 minutes, and this trade in 30 minutes. And what is this 15 minutes target here? Here you have a drop, base, rally is there. This is the 15 minutes target we achieved in just half an hour. And how much profit LTF has given? It has given 19,900 rupees, which is 14.5% ROI as per one futures margin cost. In just 30 minutes. 14.5% ROI it has given. And again prices, see, they reached very close, but we can't take a trade. If anybody kept a entry buffer, maybe your trade might have executed, some profit you would have got. But okay, this is only a good, perfect trade. And one point I forgot to tell you, UltraTech Cement. UltraTech Cement, after reaching the 15 minutes target, prices reached. If anybody would have taken again a second trade, maybe your second trade would have been stopped out. Because after that, this fine-tuned zone is violated. Generally, intraday, what happens, if you plan a trade, second time prices enter, if you get a profit, you don't mind to take another trade. If you are, that is, see, mostly it is a luck based. Many times intraday they work, second time also they work, many times. Not always, but several times. But this time it is stopped out. But what if in case if you would have taken a second trade, and if your second trade is stopped out, you need not worry about that, because that loss will be negligible compared to the huge profit you got. So that's the reason why we always look for performance point of view, minimum one is successful, that is enough for us. If second trade or third trade it is violated or failed or stopped out, we don't care at all for the performance statistics point of view. But your individual's point of view, if you would have taken a second trade and it is stopped out, you need not worry, because already you got a big trade, big profit. That is what I recommended also earlier. Once you get a good profit from the zone, when again same intraday prices reaches, take a trade. If it is stopped out, the loss will be very minimal compared to the earlier profit you got. You need not bother in case if the trade is stopped out. If it does not stop out, if it gives you a good profit, then you will enjoy the profit again second time also. So that's the reason why always I am recommending the people, when prices are reaching to the zone, take the second trade. When you have to avoid the second trade, let us assume the prices reached almost near to the digital line and then from it came. There are higher chances zone will be violated. At the time, taking second trade is quite risky. Sometimes sometimes this second trade also work even if it reach near to the digital line. And when you have to avoid, 100% when you have to avoid, suppose if it is a pierced, but within your stop buffer, then prices came down and reached the target, and again prices reached your this entry second time. At the time you should not take the trade, because zone is already pierced. So remember these conditions. And price reached near to the digital line? No. So definitely you can try your luck by taking second trade. But today luck is not even in your favor, it would have been stopped out. But already earlier you got a good profit. With that profit, this stopped out trade, hardly how much you will get, around 1%. But already you got 11 point, how much? 11.3% you got. Suppose if your trade is stopped out, still you would have got another 10% profit you would be getting from this particular stock. Okay. What about LTF? LTF mostly second trade we would not have taken, because price did not reach the zone. It didn't reach. But if anybody would have kept some entry buffer, maybe your second trade would have been executed and you would have got some more good profit from here to here. Maybe another 4% or 5% ROI you would have achieved. But anyway, I am considering only one trade. This is about LTF. And next one is Shriram Finance. Shriram Finance is a high liquidity demand zone trade. Earlier trades are short trades. Now we are seeing long trades. How our software identified? This is a 75 minutes high liquidity zone. This is how our software identified as a rally, 2 base candles and a rally candle. And this 75 minute zone fine tuned with 15 minutes time frame. It's a very simple fine tuning. So here we have a rally candle as a leg-in. You have 1, 2, 3 base candles, and then again you have a rally candle. This is the 15-minute zone. So within this 15-minute zone, again fine-tuned with 5 minutes time frame. So here you have a drop, you have a base, you have a rally, follow through candles. The imbalance started from here. You may say, this is maybe, can we consider leg out, maybe a little shorter than the large candle. You may feel like that. See, there is a hidden body, you should not forget. This candle gets some more hidden body from here. Then this will be a large candle. See, already it is almost close to the large candle, maybe a little shorter, but if you add that hidden body, this is 100% a large candle. So that's why this is the drop base rally and a very nice follow through candles. So excellent zone. That's why it worked very well today, this zone. See, today what happened at 10 o'clock 10 minutes. You got the trade and reached the target, 15 minutes target at 11:40. So almost 1.5 hours you will be in this trade. Here you have a 15 minutes target zone. You have drop, 3 base candles and a drop candle. And how much profit it has given? Shriram Finance. Shriram Finance has given 15,487 rupees profit, which is 17% ROI, because the future margin cost is very less. I think this stock margin cost is around 1 lakh. That's it. So you got excellent ROI. If you would have purchased 2 futures with 2 lakhs, maybe you would have got around 30,000 plus profit you would have got, maybe around 31,000 rupees. So this is a Shriram Finance, and the next one is Adani Green Energy. In Adani Green Energy, this is also a 75 minutes high liquidity zone. So here in the 75-minute zone we have a drop candle. You have 1, 2, 3, 4, 5 base candles and a rally candle. This is how our software identified. Drop, base, rally. And this 75-minute zone is fine-tuned with 15 minutes time frame. In this area, we don't have a proper 15-minute structure. We have a rally base, rally is there, but this one is violated already earlier in the previous price action. Here, see, there was a price action here. In that price action, this one is violated. So that's why in the latest price action, you need to look for so here we have a drop candle, medium size drop candle, then base candles, all medium size, 1, 2, 3, 4, 5, 6. You have 6 base candles and then a rally candle with a huge high exposure. This is a very high exposure leg out, moreover with gap is also there, pro gap. So this entire thing is 15 minutes fine-tuned zone. Within this 15 minutes fine-tuned zone, we have a fine-tuned 5-minute zone. Let's go to the 5 minutes time frame. Here you have a rally candle, medium size candle. You have two base candles, and then you have a rally candle. You have a pro gap. You may ask a question, why I have drawn wick to wick? Generally we draw type 2. Because of the pro gap, there are higher chances you may miss. If the risk is within your accepted limit, you can plan. If it is not within your accepted limit, you can go for position sizing. Because it is a fine-tuned zone with pro gap, it is there. See, today prices entered into this zone. And here we have a 15 minutes target also. You have a drop, 1, 2, 3. Medium size candle is also part of the base, and then a drop candle. And today prices failed to reach this 15 minutes target. The reason is here you have a resistance line I have drawn. That is the area it is holding the prices majority of the day from 10:45 almost up to 1 o'clock. 2 hours, more than 2 hours, 2 hours 15 minutes. This is the area prices were just held. They held up. So that is the reason why you need to book your profit somewhere here. And exactly till that area, you got 1:3 RR. And this is the trade, did not achieve to reach 15 minutes target. It failed to reach, but it achieved minimum 1:3 RR. So that is the way Adani Green Energy is a successful trade. For the performance evaluation point of view, it is a successful trade. And how much profit it has given? As per one futures margin cost calculations, Adani Green Energy, it has given 11,943 rupees profit, which is 10% ROI as per one futures margin cost. But remember, here the risk is high. You have to do position sizing. F&O, unless you are a high value investor, you can't take a trade. One or two, 3 lots, you can't do position sizing in F&O. Like if you are buying 10 lots, 15 lots, you can do position sizing. Instead of taking 10 lots, maybe you may take only some 5 lots or 6 lots. But if you are taking 1 or 2 or 3 lots, you can't position size easily. But cash segment, you can do position size. Intraday cash segment, you can do position sizing, and then you can plan the trade. If anybody planned a deep entry by fine tuning, you would have missed the trade. Because pro gap is there. Pro gap, you know what happens, it is a unknown area. You never know how strong the order flow in that area. Mostly they won't let the prices to enter inside the zone. Many times, first time. Next time you may get a trade. Prices may reach a little deep inside, you can plan the trade. Definitely second trade also may work from this zone. But anyway, today's trading is over. So this is about Adani Green. And the next one we got is Coromandel. Coromandel is also, we got 1:3 RR we achieved. Coromandel is also a 75 minutes high liquidity zone, but it is a supply zone. We got a drop candle. You have 1, 2, 3, 4 base candles and a drop candle. This is how our software identified this 75 minute zone. Drop base drop. And this drop base drop is fine tuned with 15 minutes time frame. Look into the 15 minute zone here. You have a drop candle, you have a base candle, and you have a failed ERC candle as a leg out. Can we use this failed ERC as a leg out? Yes. Why? Because in the dynamic view, it is a drop candle. And moreover, this entire body came out of the zone and moved out of the zone. This entire body, not near to the zone. So definitely dynamic view, it is a drop, very big drop candle in dynamic view. So drop base drop, 15 minute zone. Now this one is having a 5 minutes horizon, this fine tuned 15 minute zone. Inside you don't have a zone. Why we don't have a zone inside? Let me show you. Go to the 5 minutes time frame. In the 5 minutes time frame, you see, you have a drop candle, failed ERC drop candle. You have another drop candle. This is a very big candle, high explosive failed ERC. This is a failed ERC, but this one is a high explosive failed ERC. But in between two failed ERC candles, is there any base candle? No. But where they are picking the orders, somewhere they are picking the orders and then sharply coming down. So this is the area we have a horizon drop. Even if you add a small hidden body here, small hidden body, still this will be qualified as a base candle because it is having a big wick here. Even the hidden body, if you add that, a small portion only will be added, that won't impact this candle. So that's why this is a drop base drop. And this is the area acting as a horizon, lower time frame horizon to the higher time frame zone. And not only this 15 minutes, this entire 75 minutes candle is formation also took place by picking the orders from this 5 minute zone. See, the real leg out of this entire zone started by picking the orders from this 5 minute zone. This drop base drop. Now this entire drop, this is the 75 minutes drop candle. Go to 75 minutes time frame. Sorry, 15 minutes, 75. See, this entire 75 drop candle is again picked up the orders from this 5 minutes horizon. That way also we should respect this 5 minute zone. That means it could be a good zone for us to trade. But today, unfortunately, what happened? We got the trade, but they failed to reach 15 minutes target. Where is the 15 minutes target? Here you have 15 minutes target, the demand zone. It failed to reach. In case if it would have reached, we would have got maybe another maybe 11 or 12% ROI we might have achieved. But that didn't happen. But 1:3 RR is achieved. See here, it has given 1:3 RR from this zone, including some stop buffer and the target up to this area. And with 1:3 RR, how much profit it has given? Coromandel has given 6,107 and it gave 5% ROI. So that's why I am saying if it would have reached here, maybe another 10% ROI it would have achieved for the remaining portion. But it failed. After that, maybe the demand is strong at this point in this stock, and after that this zone is violated. It holded for some time, but not enough. After that it is violated. But meanwhile it is a successful trade by achieving a minimum 1:3 RR for the performance calculation point of view. When Coromandel has given a trade at 11 o'clock. But when you would have completed this UltraTech Cement trade, suppose if you take UltraTech Cement trade, when you book the profit at 9 o'clock 35 minutes. When you got this trade at morning 9:20 candle, 5 minutes candle. Maybe some of you may say, I took a trade in LTF because LTF trade has given at morning 9 o'clock 17 minutes. Let us assume morning 9:17 candle, 1 minute candle, you took the trade. But when you exited at 9:40, Earlier trade was at 9:30. This is at 9:40. In either case, whichever the trade you take, you closed the trade. Your funds are released. The moment you closed, and after some time, after half an hour, you got a trade in Shriram Cements. You got a long trade here. When it happened at 10 o'clock 10 minutes. When you closed the trade at 9 o'clock 40 minutes. So that means exactly after half an hour, you got a trade in Shriram Cement, and you might have held this trade for 1.5 hours. At 11:40, it reached the target. And that way Shriram Cements has given you 17% ROI. Maybe Hindustan Petroleum or UltraTech Cement, one of these trades you would have taken, and both together you might have achieved around close to 30% ROI you would have achieved today. Close to 30%. If second one, if you have taken more than 30%, and if you would have taken UltraTech and then the second trade, maybe you would have got around 28% ROI. See, during intraday, getting 28% return on your investment, it is not a joke, right? But that is the power of our high liquidity zones. That is what we should understand. Okay, apart from this, what are the other trades we did not get? At the end of the video, I will also discuss about Nifty also. Nifty is not a stock near the zone, but some points I have to explain. The other trades we did not get, Hindustan Unilever. This is a daily high liquidity zone. It is not having a proper institutional order flow. This is a daily zone. See here you have drop base rally. This is a daily zone. And this one we fine tune. Sorry, this is 4 minutes, 4 hours. Okay. Here you have a drop, 2 base candles and a rally. This is the daily zone. Inside the daily we fine tuned with 75 minutes time frame. See here you have a drop candle, you have 1, 2, 3, 4 base candles and a rally candle. Okay, this is the area we want to fine tune with 15 minutes, but there is no proper 15 minutes order flow. There is no proper 15-minute structure here. And moreover, previously prices once reached very near to the distal line. See here, it's a drop candle, rally candle, in between no base candles. And no 15-minute structure. There are higher chances this zone will be violated. But today prices did not enter, but we didn't plan on this zone, because we are expecting this zone will violate according to our concepts. So that's why this is a rejected for our trading point, our trade plans point of view. There is another rejected zone is LIC Housing Finance. You might be thinking today it would have given a huge profit. See, the prices came up to this. I have fine tuned up to 15 minutes level. But actually, we don't analyze this stock. The reason is this is on 27th December 2023. 1 year back, you won't be having 5 minutes data, intraday data, to fine tune the zones. And moreover, we have two 75-minute zones are there. Inside 75-minute zones, we have 15-minute zones are there. And one of the zones already earlier it was tested here. But anyway, we can't find 5-minute zones. We don't have data. And today price came to the second 75 minutes fine-tuned zone, and from there sharply it moved. Maybe there could be a 5-minute zone might be there. It might have given you the trade. But anyway, you can't plan. Unless you have the data, you can't plan. Because the price action is happened, we are thinking maybe something we missed in this stock. But this stock we rejected for the trade plan because of data issues. Data is not available. Not data issue. Data is not available. But sharp rejection. Some strong order flow. But is there any new zones are created today from this price action? Maybe drop, two base candles, rally candle. The 15-minute zone is here. Any 75-minute zone is created? No. Drop, rally, no base candles. So anyway, next time you can't fine tune this because you don't have 75-minute zone here. Okay, next one is Nestle. Nestle is also not a good zone. Actually, it is a bullish trade setup supported stock, but inside the zone structure is not good. First, let me show you. This is a 75 minutes. We have a failed ERC as a drop candle, two base candles and a rally candle, and then a very big follow through candle. This is how our software identified this high liquidity zone. Not only that, this zone is a bullish trade setup, monthly income trade stock. This is MIT, monthly income trade, and this zone is overlapped with the weekly zone. This is again overlapped with monthly zone. It looks everything is promising, but unfortunately there is no fine-tuned 5-minute zone. If that is the case, there are higher chances this zone will be violated. Unless institutions create a new zone and push the market up next time when prices are entering, in that case, in the next retracement, we get the trade opportunity. That is only 20% scenarios when a zone can be successful. But 80% scenarios, this zone will be violated. That's why we didn't plan any trade in this. Why we didn't plan? Look into the 75 minutes. We have excellent 75-minute structure is there. See here, you have a rally candle, you have a base candle, you have a rally candle. Rally, base, rally. Okay, within this rally, base, rally, we don't have proper 15-minute structure. Something I am not comfortable with this structure. All these are all small candles or medium-sized candles. See how prices are moving, like step by step they are moving. Easily this zone will be violated. So this is the reason why I didn't have any good impression on this particular stock. I just left it. See, remaining all the stocks we got, the trades today. Okay, and finally the last one is Nifty. Actually today morning I made a video all of a sudden because when I opened the internet and all the internet newspapers or maybe the televisions, business news, they are all saying FIS are selling and market will go down. All blah 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 they are talking. So we already analyzed this stock on when 14th January I have analyzed this monthly zone. We have a monthly zone. Let me go to the monthly time frame. This is the analysis we did. Whatever the analysis we did on 14th January, same analysis is here. And from that analysis, previously, look into this candle. This is the monthly candle. Prices entered and picked up the orders and then it gave 100 points move. 1000 points move it gave. Within 9 trading days, 1000 points move. And after that again, it was started falling down. And while it started moving up, again it created a new order flow. That new order flow today, prices entered. That new order flow already I fine-tuned. Today morning video I have shown that. Actually I prepared that video for my LinkedIn subscribers point of view. Later on I realized maybe if I post even in our channel, maybe some of you, if you would have looked into my analysis, maybe you get a trade opportunity. That's why before market starts, I just posted I didn't do any analysis. I just kept the analysis. Only thing I shown is a newly fine-tuned zone. What I had run, I just shown that. Not even I explained that. So go to the daily zone. There we have a daily zone. Here rally, base, rally. This daily zone, institutions keep on creating new orders within this. Previously we identified some orders. From those orders it picked up the trade and then moved up. While moving again it created a new order flow. And in this new order flow today we got the trade. So this is inside the daily zone. Go to the 75 minutes time frame. See here we have a 75 minute zone. Drop, base, rally. Already we have a 75 minute zone. This is the one. And this is LOTL zone. What is this LOTL zone indicates? Maybe this is a high liquidity area. This 75 minutes area. That's why I have given importance. Now I went to the 15 minutes time frame. I have fine tuned. There is nothing red here. What you will already learn, those concepts only. This is the 15 minutes zone. Drop, 3 base candles and a rally candle with pro gap. Hidden body. Lesson 9.3 and 9.4 you learn the concepts, hidden body and hidden zones concept. This is the drop, 3 base candles and rally. This is the 15 minutes zone. This 15 minutes zone I fine tuned with 5 minutes time frame. Here we have a drop, 3 base candles and a rally. Same again, rally, base, rally, but it is not a convincing leg out, and moreover prices almost came and again started moving up. So this is the origin. This is the area where you should plan. This is a fine-tuned 5 minute zone. I just shown this. Not even I explained. I just shown this chart. Probably from the daily time frame I have displayed. And also in that video I told maybe next time when prices are entering again from here it will be started moving up. Maybe it may give even more than 1000 points it may go up, or maybe 4 or 500 points it will move, 400 or 500 points it will move. Then institutions will decide, in case if they decide to violate this zone, and in the lower order flows, fine-tuned order flows, if they want to execute, some more days prices will be moving and then it will come here, it will pick up the orders and then it will be started moving, and at the time trend will be changed to uptrend and then a rally will start in the market. By the time this price hour extension will be completed, because now prices are nearing to the monthly EMA. See the line I have drawn, black color line. At present this is the monthly EMA line, at this black color line. Or maybe few days slowly this line will started moving. Somewhere here it will touch and from here it will be started moving up. That possibility. I evaluated several possibilities. One possibility, from here it will start moving. A new higher high will come. The moment new higher high will come, trend will be changed to uptrend. See, currently the trend is changed to sideways. How the trend is changed to sideways? See, earlier, do you remember the swing lower highs and swing lower lows, higher highs and higher lows? Look into this. We have a lower high, lower low, lower high. Now equal high. The moment equal high, not equal high. Now higher high. We have lower low and higher high. Now what it should form? It should form higher low. It should form. It didn't form. It has given today. It has given equal high. Do you remember the concept? New concept I developed: equal highs and equal lows. See, exactly the lows are almost same here. Why? Because the sideways trend still continues. It is a continuation to the sideways trend. Now let us assume now more than 1000 points next time it has given. Then what will happen? And this higher high will be violated. This high will be violated. We get a new higher high. The moment we get new higher high, there are higher chances the sideways trend will be changed to uptrend. But confirmation is required at the time with lower low. After lower low, again the trend will confirm. Or the advantage with supply demand zone is, if there is any supply zone, if that is violated, now trend will be changed to uptrend. See, supply demand zone trend changes are much faster than swing higher highs and higher lows based trend. Swing higher high, higher low based trend is very stable, but little slower compared to supply demand zone. But they are very stable. See, by considering all these points, I raised a question. What could be the reason? Who made this trend changed? Who made this trend changed? This monthly supply zone. See, so many institutional order flows. Almost 1 hour we analyzed this chart on that day, on 14th January. So many points we discussed in that video. Many points, many interesting points. So that is the reason why, see, look into this candle. It gave 1000 points move that you will see in the daily time frame or 75 minutes time frame. See, this is the daily time frame. The prices came to this daily zone, this rally base rally, this daily demand zone, prices came. This daily demand zone is inside the monthly demand zone. It is not a fine-tuned daily demand zone. But daily zones itself are powerful zones. It need not be a fine-tuned to get the success. But inside daily we have fine-tuned zones for confirming this order flow is strong. So that's why from here Nifty has given 1000 points move. Now again the same 1000 points, again it came down. Now today it has given 300 points move today, Nifty. See, up to here, somewhere when price is here, I send a message in our Telegram group. Nifty gave 300 points. It is a indication that if anybody wants to book, they can book the profits. See, after that, market came. Again, some more it came down. Again, it moved up. So today a lot of swings took place. Go to 5 minutes time frame, you will understand. See, today at some point of time, market was very sharp. Everybody expect the market will crash today. But before itself I told, what I told? We should not worry about all these news. People are saying, see, always remember, one point today morning video I did not tell, but you people should understand. See, this a panic situation will be created by the institutions because they want liquidity. When they want to buy, people should sell, right? If there are no sellers, do institutions buy orders will be executed? No. See, by the time prices sharply came here, there is a panic in the market today. Because 200 points down today by the time prices reach here. I know this is the area we get a very good profitability. Because we are supply demand zone price action traders. We know how institutions will think. We already read their minds. That way we are identifying institutional order flows. We know institutions are playing games with us because they want their orders should be executed. To make their orders executed, they should bring the prices up to this, their order flows. They should bring you. And then they should make sure you all will get panic. And you all will sell whatever you have. When you sell, they will be buying. Why they will be buying? Because they have their pending buy orders here. See, when market sharply came down, look into the 75 minutes candle, you may get better clarity. See here. Today morning session, first 75 minutes, see how sharply prices came. By looking into this candle, see there is a drop, base drop, 75 minute zone is created. But what happened? This 75 minute zone is violated. Now 75 minutes trend is changed to sideways now. This drop, base drop, where it happened? In the monthly zone. By seeing this supply zone, definitely people will get panic. Not only normal people, even supply demand zone traders also, some people get panic. But we know how institutions are playing with us. And also we know this is the buyer's area, this is not seller's area. Monthly demand zone is a very strong buyer's area. And we have seen many times institutions, when they are entering into the monthly zones, those monthly zones are letting the prices move further up from that particular point onwards. Many times these monthly demand zones at Nifty, they are changing the market direction. Now everybody say down, market is down. Now the direction will be changed. Is it going to be changed immediately? I can't tell, because there are some more order flows. We don't know how institutions will be thinking. That's why I evaluated different possibilities. One, from here they push the market up, that is one possibility. Another possibility, again they bring, and again this next order flow will execute, again it will push, again they will push it down. Next this level it will reach, they will make sure some of these order flows will execute, and after that market will be started moving up. Any of these situations will happen in the coming days. But whatever happens, we know when to buy, because we already identified institutional order flows. On January 14th itself, we identified all their order flows. From that order flow, this entire big move, 1000 points move took place. Now again today you see, from this area, prices were started moving. When you have such a big candle today morning, first 75 minutes, who dare to buy this? Only supply demand zone traders only will dare to buy. That is what I talked in that video. Nothing more I talked in that video. Because my LinkedIn subscribers, many of them may not be knowing or may not be having knowledge about supply demand zone price action. I want them to experience practically. I want them to inform before market starts, because I know today market is getting into these order flows. I just want to surprise them. They all will be thinking market will crash. That's why the heading itself I gave a very tricky heading. What is that heading? I just forgot, sorry, all of a sudden. Something I conveyed a meaning. Do we really care about institutions when they are selling? We don't care. Why do we care? Institutions, people, newspapers, everybody is saying institutions are just selling and they are running away from Indian market. That kind of message they are conveying. No, they are not running away. They are selling means they are waiting for next buy order flows. They didn't run away. Their order flows are here. They want to make sure their order flows will be executed. They are just pushing the market until their order flows, long order flows get executed. The pending order flows. They are just playing with us, that's it. You need to understand their play. If you understand their play, you will also start trading along with them. You will also enjoy the profit. See, today 300 points profit it has given in the intraday. See, after that, see how sharply it moved. Up to here it went. Around 320 points something it has given. After that, definitely some profit booking will be there, because coming into the last 1.5 hour session, that's why you have seen some points move, 100 points down and again another 50-60 points up. Such kind of movement you have seen. But on a overall, everything happened as per our plan only. Whatever we analyzed, everything happened like that only. Nothing more than that. So that's why always try to understand the institutional order flows properly. See where our zones, are they at monthly time frame, are they at weekly time frame? Monthly time frame, if the order flows are very strong, fine-tuned order flows, those zones, it's not easy to be violated. See, Nifty, how many order flows we identified? This entire analysis we did on almost 1 month back, on 14th January we did, and today it is 12th February. 1 month back we did our analysis. Whatever the analysis we did 1 month back, that analysis still it is working perfectly. Don't forget, monthly means what? It is a strong buyer's area. Monthly zone is a strong buyer's area. Very strong buyer's area. Institutions can't play inside the zone against these buy orders. They can't make this zone violated just like that. Even if all the institutions sell, still there could be so many other institutional buy orders are here. Maybe it could be domestic or it could be foreign investors, whoever it is. There are strong order flows here. That is the reason why confidently I said, we don't bother what institutions are selling now. Everybody is saying. We know where the market will will be moving up. We know where institutional buy orders are there. That's why I made this statement. You are supply demand zone traders. You all should feel proud about yourself. Because newspapers and televisions, everybody is become panic and making the public panic. They become panic and now they are making public panic. And telling this is our institutions are running away, FIIs are running away by selling everything. And my statement is completely 100% against statement. We don't care what institutions are doing because we know where exactly the order flows are there. We have strong reasons. Do you think any other stock market analyst will be able to tell our market will start moving up? No. But our supply demand zone traders, I'm not saying I'm able to tell. Not only me, like me, any supply demand zone trader will tell the same thing. If you are a supply demand zone trader, if you have a minimum experience, whatever the statement I made today, same statement you will also make. There is nothing great. I'm not saying we are great here. What I am saying is we are right traders because we build the right skills and we are feeling proud for that because we learned the right skill. The right skill that is accurately predicting what is happening to the market. Okay, if at all, if you see, for that we all should feel proud about that. Proud about not for predicting the exact market. Proud that we build the right skill. We build the right skill. That's why we should feel the proud. Once you build the skill, anybody can identify the actual direction of the market according to the skill we learn. But learning the right skill is important. How many people are really learning supply demand zone concepts? Very few people, right? Even, see, 8,000 US dollars course. The original cost is 8,000. That is the original price. That 8,000 US dollars, our Indian traders, now they are charging a few lakhs. They are giving discounts and they are offering. Now we are providing complete free training. Moreover, the many new strategies I developed, new concepts I developed, I also providing with free of cost. Not even taking single rupee from you people. Because my focus is on the software. My focus is not on the training related. Because I need to promote my software. I want to make the software reach to the entire public. That's why at least I am analyzing some stocks for education point of view. And trying to share my experience with you people. But strictly speaking, I don't like this work at all. My work should be developing the software, developing new features, developing even any new advanced features. Now today we are getting 80% success rate. Is there any chance to get 90% success rate? That way my mindset will be thinking. Today we are getting 6% intraday ROI. Is there any way to get 10% intraday ROI? That is how I will be thinking. That is how I want to develop the new things, new findings. But until our software at least reach to the at least majority of the people, I have to do this work. Like analyzing some of our performance of our what is really happening. But to be honest, really I don't like this training related activities. Let me frankly tell you. But you are lucky, at least you got opportunity to learn this entire course. The new people who will be coming in the coming future also they are lucky people because highly expensive course they are learning without spending the money. And at the same time, we are also enjoying the profits given by our high liquidity zone. A concept we developed, a special concept. So every day we are having profits, right? See, the losses are very small. The red colors are very small. But black colors, the black color indicates success. Red color indicates stopped out trades. So in this page, how many stocks you have? 18 stocks. Out of these 18, only 3 are stopped out. And moreover, the ROIs are very, see, today ROI is 10%, 17%, 14.5%, 11.3%. This is the only least ROI, 5%. Generally, we feel 5% means it is a very good profit. Even though our intraday average ROI is 6, we consider even up to 4 to 6% is a very good profit. If 4 to 6% is a very good profit, then what about 10%, 17% or 14.5% or 11.3%? That is extraordinary, right? Today we got extraordinary profits because the volatility in the market is very high today. When the volatility is very high, what happens? Many zones will be stopped out. But is that happened to our high liquidity zones? No. Our exactly prices reached our high liquidity zones. From there, the market direction is changed. That is the beauty of the high liquidity zones. That way we are finding the right zones and we are getting the right rates. These are the points you all should keep in our mind. Okay, this is about today's session. Let's all meet again in our next video. Thank you.